Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about a very interesting project called Phantom, right? So if you guys know, Ethereum is obviously very slow and the transaction costs are very expensive, and there are many retail investors who don't have a lot of capital to invest and who only want to have some form of savings that they want to probably like allocate to crypto. And when they try to buy some tokens on Uniswap, they experience extremely high gas fees, and therefore they're moving away from Ethereum or any Ethereum based projects, and they're trying to find alternative sources, right? Currently, Binance Smart Chain and Huobi Eco Chain or Hiko Chain are basically offering some really good alternatives, but you can clearly see that as more and more projects are coming every single day on Ethereum, people who want to experience a cool new project on Ethereum have to wait a few months or even like a few weeks in order to have a similar project open up on Binance Smart Chain or Hiko Chain. And if you see, there are also concerns of lack of decentralization of both Hiko Chain and Binance Smart Chain, because they are innately from the exchanges that created them. So even though Binance has technically funded and created the Binance Smart Chain, with the little with the very little influence that they're trying to incorporate, people still are worried about the fact that since it's a CDeFi ecosystem, there is too much control for one authority to hold, right? And therefore they're trying to find decentralized alternatives. Some people may want to use the Polygon network, which is basically Matix, or formerly Matix, but currently it's known as Polygon, and they're trying to create their own side chain with the potential migration of DeFi applications from Ethereum to Polygon with very quick transaction speeds and extremely low gas fees. But the problem is the on-ramping from Ethereum to Polygon costs Ethereum gas fees, right? If you try to migrate tokens from Ethereum to Polygon network, you will still have to pay significantly high gas fees in order to move your tokens from this network to that network. An alternate solution is Avalanche. It's also launching its own DeFi based applications, but currently the Pangolin DEX is the only DEX that's operational, right? There are many projects that are slowly migrating, but none of them are as functionable at this time of making this video as people would expect, right? So if for all other alternate blockchains, people are definitely searching for multiple opportunities, and one such opportunities exists with the project Phantom, right? So what is Phantom? So Phantom is basically a blockchain solution that also aims to create smart contracts on top of it. So if you want to learn more about Phantom, you can go to phantom.foundation and do some digging to find their white paper and other additional docs to to understand what this project is. So one platform, endless solutions, right? So that's basically their the catchphrase. Phantom is a fast, high throughput, open source smart contract platform for digital assets and dApps, right? So basically, it sums up very clearly. It's a fast, high throughput, open source smart contract platform for digital assets and dApps, right? They aim to provide a clutter-free, highly scalable and high throughput dApps and smart contracts to their platform, and they aim to address most of the issues that we have on Ethereum, and make it decentralized as opposed to CDeFi kind of ecosystem produced by Binance Smart Chain and the Hiko chain, right? So if you see, they have several projects already working with them. Chainlink, Ren, Ban Protocol, the Graph, Waves are some of the projects. The Ministry of Public Health is also supporting this project. So that's something that's very interesting. So why Phantom? Speed, security, scalability, right? So when you want to choose a blockchain, if you want to participate in a blockchain, you have to have high speeds, because even when people were using other ecosystems, they were expecting high speed transactions. So if high speed is not set as the benchmark, then nobody's going to use it, because they would rather use Ethereum than using any other alternative blockchain which has very less traction and which is also slow like Ethereum, right? So people don't want to use blockchains that are not fast. They want to use a blockchain that can process transactions, multiple transactions simultaneously within a fraction of a few seconds, right? So that's basically what they want. Security is also very important, because there are multiple projects that offer different smart contract based platforms, but the problem is it's not as secure as Ethereum. It's not as reliable and secure as a decentralized network which ensures the security of their funds, right? So security is a very important feature, and I believe that Phantom is definitely offering that. Scalability, again, as we know, Ethereum is struggling due to its lack of scalability. I think at least Ethereum 1.0 is struggling, and several other blockchains are trying to adapt scalability as soon as possible. Some of them include Polkadot and even Cardano. So when it comes to scalability is also going to be one of the most important benchmarks that any blockchain should have to have as its minimum barrier, as its minimum expectation, so that people can, by default, when they participate in an ecosystem, they don't have to worry about lagging or in issues with interoperability and so on and so forth, right? So I believe Phantom is offering all three criteria. That is very important. Phantom's ABFT consensus protocol delivers unparalleled speed, security, and reliability, right? So basically, they use instead of using proof of work or proof of stake consensus protocol, they use ABFT. If you want to know more about it, you can click on their website and go do your own research and do in-depth analysis before investing in this project, right? So basically, this project uses ABFT consensus protocol in order to ensure that the project or the ecosystem completely remains scalable and highly fast and secure, and it's fully reliable for anyone to use, right? So that's pretty cool. Enjoy almost instant transactions and extremely low fees. So again, one of the key selling features are instant transaction speeds and extremely low fees, right? So that's pretty cool. They have a pretty cool video on the website. If you guys want to look at their video, I would highly recommend that, so that you can understand pictorially what this project aims to do, right? So almost instant transfer fees. So these are some of the selling features that they have on why someone should choose to invest in projects built on Phantom protocols. So if you see, almost instant transactions on Phantom are finalized in a couple of seconds and cost a fraction of a cent. So again, pretty straightforward concept that we already discussed before. Simply secure. Phantom's validator nodes form a global, trustless, and leaderless proof of stake network. So although it's a proof of stake network, the consensus mechanism is based on ABFT, and if you see, this is highly scalable and highly secure, right? So that's pretty cool. Highly scalable. Phantom can process thousands of transactions per second and scale to thousands of nodes. Again, pretty straightforward. Ethereum compatible. Again, this is another kicker, right? So if you want to invest in this project, or if you want to invest in any project that is built on the Phantom blockchain, why would you invest when you know that within a few years, Ethereum itself will have its own highly scalable, highly fast ecosystem, right? This kind of answers that question. So Ethereum compatible. Phantom is Ethereum virtual machine, or EVM compatible. Deploy and run your Ethereum dApps on Phantom, right? So basically, every project that aims to create its own blockchain currently know that they're going to be successful. The reason is they want to try to capture as much market share from Ethereum, and therefore all blockchain projects are rushing to create to release their products as soon as possible. Some of them are going to be highly successful. Let's say, Polkadot ecosystem is going to be very successful. Some of them will be successful, but it's not going to happen within this year. For example, Cardano, right? Some of them will be successful, but they will probably struggle to get traction initially. But once they gain traction, it's going to be crazy, right? Some examples of these are Avalanche blockchain, right? And there are also several other platforms that are also competing. Binance Smart Chain is successful currently partially because of the fact that Binance Smart Chain makes, converting an ERC20 token into a BEP20 token very easy, right? So all you need to do is, if you are already in crypto, you probably have Binance account. When you deposit your crypto on Binance, when you try to withdraw it, you are given multiple options. You can either withdraw it on a ERC20 format, or its native blockchain token format, or you can withdraw it in the form of BEP20 tokens, right? So since that particular feature has made it much more easier for people to interact with Binance Smart Chain, that has pretty much made Binance Smart Chain in a way get the traction it needed initially, and combined with multiple other factors, being at the right place at the right time, made Binance Smart Chain very, very famous, and it made it grow very quickly, right? People would still love Binance Smart Chain if it were not for the C DeFi factor, right? Binance Smart Chain is pretty good, it's pretty fast. I personally like it, but there are people who hate it because of the fact that it's not fully decentralized, right? Which is totally understandable. Again, as an investor, I understand that there are people who will have values to invest in, or they have their own agenda. Everyone should have an agenda when they invest in projects. So there are people who don't invest in any projects that don't have the decentralization component, right? And which is perfectly fine. I kind of respect their views, but I personally don't really worry about that too much. I only worry about the fundamentals of the project or the token itself. And when you see that factor puts off many people from investing in the Binance Smart Chain or participating in Binance Smart Chain DeFi ecosystem, right? So the problem is you have smart contract ecosystems that offer high throughput and high speeds and highly scalable, blah, 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 and all that stuff, right? But they are not necessarily fully decentralized. There are projects that are fully decentralized, but they're not highly scalable. There are projects that are decentralized and highly scalable, but they don't have this easy bridge mechanism where they can allow their users to convert ERC20 tokens into their own native blockchain tokens, right? So that is problematic, right? But if you see for Phantom, however, we have seen that it's pretty fast, it's pretty secure, it's pretty scalable. It's also Ethereum compatible. So if you want to migrate your ERC20 tokens, you can easily migrate it to Phantom and you can start doing DeFi, right? The problem with most of the projects that aim to become the Ethereum killer is that they won't really hold traction for too long, because once Ethereum 2.0 comes into play, they will probably be used less and less, although there will be certain projects which will continue to flourish. Most of the users are only using other smart contract blockchains as a temporary means to wait till Ethereum 2.0 gets released, right? But once Ethereum 2.0 gets released, it already has several high quality projects. It's going to be easy for people to use those platforms, and therefore they will kind of leave other platforms, including projects like Phantom or Avalanche or whatever, right? Temporarily. So in order to prevent that, all ecosystems need to be EVM compatible, right? If it's not Ethereum virtual machine compatible, then they will definitely be abandoned in the in their corner. And once Ethereum 2.0 comes into play, nobody's going to even use these projects because they're not even fundamentally EVM compatible, right? But Phantom aims to solve this problem by being EVM compatible, and it will still continue to be relevant, in my personal opinion, even after Ethereum 2.0 gets launched, right? Because there are projects that you can, if you find a good DeFi yielding rate in Phantom as opposed to say Ethereum 2.0, right? you can easily use a bridge to transfer your tokens to Phantom, use yield farming. You can kind of do interoperable cross-chain DeFi farming, which will be a thing in the future, which I believe, right? And Phantom makes this possible, right? So that's one of the value propositions that they have. Phantom Finance, a new DeFi experience, the all-in-one DeFi suite. Mint, trade, lend, and borrow digital assets directly from your wallet. Near zero fees and instant transactions. DeFi for everyone, right? So the same kind of deal with the DeFi. You are able to do things in a decentralized way. You can mint tokens, you can trade, lend, borrow, do all sorts of DeFi stuff on Phantom as well, right? Liquid staking. Use your staked FTM as collateral for DeFi. Your delegations are liquid within the Phantom ecosystem, right? Again, pretty straightforward. F-Mint, you can mint dozens of synthetic assets, including cryptocurrencies, national currencies, and commodities. So if you want to create stable coins, you can create the F version of the tokens. Let's say, for example, FUSDT, F gold, F Tesla stocks, or whatever. You can mint your own form of cryptocurrency, or any form of assets, or any form of stock, anything, right? F lend, lend and borrow digital assets to trade and to earn interests without losing exposure to your FTM. So you can lend, basically the same concept. F trade, trade Phantom based digital assets without leaving your wallet, fully non-custodial and decentralized AMM exchange, right? Again, F trade provides you an opportunity to trade just like Uniswap, and you can do it at the comfort of your own wallet without removing your coins from the wallet, right? Which is pretty cool. Developer friendly, build on Phantom. Start building on Phantom using Solidity and the tools you are already familiar with: Remix, Truffle, and MetaMask. Phantom supports the EVM, and you can deploy your dApps just like on Ethereum. Access to the documentation and connect with our developer community. So basically, this is a message to all developers, right? So if you want to develop a project, or if you want to migrate one of your projects to from Ethereum to Phantom, you may wonder like what kind of coding language do they use, or what's in it for me, because I have to create something from scratch in a different blockchain, which may or may not exist for too long, right? Firstly, I believe that Phantom is going to exist for a long time. It's going to coexist with the Ethereum, Polkadot, Cardano, and Avalanche, and so on and so forth. So will so many other countless number of smart contract based blockchain protocols that will eventually be released, right? Which we are not even aware of at the moment. But the problem is, if those smart contract based platforms don't use Solidity, which is basically the coding language of Ethereum, then they are not going to be interoperable with Ethereum, right? Therefore, almost all smart contract blockchains plan to, or at some point will have to allow their developers to develop in Solidity, so that there can be some form of interoperability with Ethereum, so that they can continue to get traction from Ethereum based developers and the Ethereum focused community, right? So if you are a developer and you want to you are worried about creating dApps on Phantom, they got you covered. They are basically using Solidity, so you can basically use the exact same coding knowledge from Ethereum to develop dApps, and you are also able to use the Ethereum virtual machine compatibility on Phantom to develop new dApps, or even port or even migrate dApps from Ethereum to Phantom. And you can also access the documentation to read more about the information, right? You can click read the docs in order to read more information. So again, EVM compatible, Oracle's integration, open source, robust APIs, and so on and so forth. These are some of the key selling features of Phantom, right? Stake on Phantoms. Earn rewards by staking your FTM to help secure the network. Choose your staking preference. Start earning with a few clicks, and use your staked funds as collateral on DeFi. So you can start staking Phantom if you either already own Phantom, or if you want to buy Phantom. One other reason for buying Phantom is to stake it, right? If you stake it, it's going to secure the network, and you'll also be rewarded just like any other staking platform, right? Earn up to 13% APY. Again, if you're wondering how much will I earn, they have answered this very question, in the very next line. Earn up to 13% APY. Stake as you go earns around 4% APY on your capital, up to 13% for a 1 year commitment to staking. So if you lock up your stake for a year, you will be able to earn 13%, and you can kind of earn at a minimum of 4% per annum, right? So if you are interested in the long term hold, if you're holding phantom tokens for long term, then a year of locking your phantom is not going to be doing anything bad to you. But if you want to not lock up your phantom because you want to hold it for short term, then this may not be for you, right? Choose your rewards. You can choose how long to lock your delegation for, from no lockup to up to a year lock for increased staking rewards. So that's pretty straightforward. Unlock liquidity on Phantom. Your delegated FTM gives you SFTM, a synthetic asset you can use within the Phantom DeFi ecosystem. So when you lock your FTM, you get a synthetic version of FTM, which you can use on DeFi lending platforms within the Phantom blockchain, right? Compound your stake. You can claim rewards every few hours and compound them for even greater returns on your delegation. So you can obviously compound them, but you have to probably do it manually. So that's something which probably they have to work on auto compounding. So they've also given you a rewards estimator and how much you'll be able to earn if you stake your FTM tokens, right? It seems like currently it's about 10.49%, although before it mentioned 13% or something. So again, you can go to their Discord, Twitter, Telegram, and GitHub to learn and understand about the project. They also have a Phantom Wallet app, a mobile app, which you can use probably for interacting with Phantom DeFi applications, which will start to catch up pretty soon. And there are some other news information that may potentially be of use to you when you do your research. And that's it. That's pretty much it. So again, it's a pretty cool project. If you guys want to learn more about it, go to phantom.foundation and do your own research, right? So let's go back to the CoinGecko page for Phantom. So Phantom is currently the 79th ranked token by market cap on CoinGecko, and it's currently trading at 41 cents at the time of making this video, and it recently had a 5.5% increase in the past 24 hours, right? So if you look at the market cap, it's $1 billion in market cap. Again, when it comes to market cap, you can obviously understand that when it comes to tokens, token market caps are completely different from market caps of coins, which are basically coins are basically they have their own blockchain, and they are the main kind of like coin or the token of that particular blockchain, right? Any other project that gets developed within a particular blockchain issues its own tokens, which rely on the main blockchain to function. So that's the difference between coin and tokens. So if you take token market caps, it's completely different from coin market caps, right? So when it comes to the coins which have their own blockchain, this market cap is still relatively low because there are several blockchains, and many blockchains try to compete with Ethereum because they use Ethereum as their benchmark for comparison, right? And if you compare Phantom's market cap with the Ethereum market cap, because they both are blockchain based coins, you can see that obviously like Ethereum is undefeated, and it will probably continue to be undefeated unless there's something critically wrong with Ethereum 2.0, right? But when you take other blockchains, they should at least try to reach 50% of Ethereum's market cap, right? That will be probably their short-term goal. In the long-term goal, they're probably aiming to overthrow Ethereum altogether and make Ethereum obsolete, right? But for Phantom, if you see, $1 billion in market cap is pretty undervalued for a blockchain that aims to create a big platform in a highly scalable, highly high throughput environment, right? So I still feel like, in my personal opinion, the ranking as well as the market cap suggests that this project is highly undervalued. Again, it also depends on how many new projects or how many projects are consistently being developed on Phantom. if the projects don't either migrate from Ethereum to Phantom, or if there are not a lot of projects that are developing in Phantom in the first place, then the market cap is going to shrink, right? But I believe that's not the case, because I do believe that Phantom will succeed, not only because of its innate ability to succeed, but I believe that there is one factor that will definitely help Phantom succeed, which is Yearn.Finance's founder, Andre Cronje. He himself is supporting Phantom, and he has a huge following. And if you see, Andre Cronje has created Yearn.Finance and Keep 3R or KP3R, which is another token that I'll cover in the future. But those two projects like exploded like crazy, and any project that Andre Cronje talks about instantly pumps like crazy, right? He used to be an employee at Phantom Foundation, and recently he has talked about Phantom multiple times, and that's definitely garnering attention from members of the DeFi community. And I believe that he, along with multiple other people, talking about Phantom protocol will make Phantom much more successful, right? And also, based on his credibility and reputation, he doesn't seem to be like a person who would support or motivate people to use Phantom if Phantom weren't good enough for him to endorse in the first place, right? If you get what I'm saying, that like Phantom is meant to be successful because it's a former employee and the creator of one of the most popular DeFi projects, Yearn.Finance, is saying that this project is having big plans and updates in the future, right? So if you don't trust me, or if you don't trust anybody else, you can definitely trust someone who already works in the DeFi space and who has already created a very successful project, and he's Andre Cronje. And there's a Medium post where he has explained why Phantom is probably going to be one of the most compelling projects to invest in, right? So you can go ahead and do your own research and find the article and maybe come to your own conclusion, right? But I believe that based on not only what he's saying, based on also what we are seeing right now in the current scenario, and based on how Phantom is planning to adapt itself to the new and improved environment, I believe that the market cap for Phantom at this particular stage is relatively undervalued, right? If you look at the circulating supply, it's this is one of the main reasons that I don't like this token. One of the main reasons why I feel like this token can slump in the short term, because if you see, the max supply is 3.175 billion tokens, and the current circulating supply is only 2.5 billion tokens, right? So again, if you see, again, my rule of thumb, or something that I used to do my own research, is basically the maximum supply of the token. I mainly care about whether a token has a threshold of 100 million tokens or less, right? 100 million tokens is like a reasonable maximum token supply for any token that aims to be a part of the DeFi ecosystem or create a blockchain or anything like that. But when it comes to tokens for blockchains, if they are high, then it would mean that they are giving out new tokens as inflationary rewards for liquidity farming or yield farming or staking or whatever, right? So based on the fact that this project aims to provide staking rewards, and high staking rewards such as 13 to 10% to 13% means that they have to issue new tokens, and the new tokens comes from the maximum supply, and therefore the maximum supply should be big enough to sustain the rewards to entice people to stay on the blockchain, right? But I'm still not really happy with how the tokenomics has played out for this blockchain protocol. Maybe they could have stuck with something less than billion tokens as max supply, but this is something that I personally hate about this project, right? But again, you can also expect to see, based on the circulating supply, new tokens that are going to be launched in this in the market due to staking rewards are going to slump the price for a bit longer. If that factor were to not be in place, I believe that this token would be worth way more, and the scarcity portion would have added to this token's even more high valuability, right? But that's something that I think most people may disagree or agree, but that's something that's my opinion, right? So if you look at the charts, you can clearly see that people are noticing this project. I believe that the huge spike came immediately after Ethereum started clogging up, and Ethereum literally became unusable. But if you look at the price of this token, it's very incredible. If you see, we have the information from 29th of October 2018, and this token was worth 1 cent at the time, right? And it was pretty much at that range, around 1 to 2 cent range, until August 2020, where during the DeFi craze, this token had a small bump, which I'm pretty sure you guys can see. It reached about 4 cents per token, like a 4x from its 1 cent range, and then it kind of like started slumping again, going back to the 1 cent range. And if you see, on January was when the project started taking off, and then it had a mild takeoff, but then it kind of like slumped a bit in mid of February, and then it started shooting up like crazy. So what happened from mid of February to the current point? Ethereum was getting way more clogged up. That was the exact same time when Binance Smart Chain also started pumping like crazy, and people were starting to realize that Ethereum is going to be unusable for any simple transactions or to use any DeFi applications, right? And therefore, people were already starting to search for other alternative blockchains, and they found Phantom to be a likely candidate, right? Since then, you can clearly see that the price kind of like from 65 cents, which is the all-time highs as of now, it's kind of like cooled down a bit, and it's currently at 41 cents. I believe that it has a potential to even reach 38 to 35 cent range in the upcoming weeks. But um, once it stops at once the price reaches somewhere in between 38 to 35 cents, I believe that it will start rallying back again, because today morning Bitcoin was obviously reaching its new all-time highs of 61 to 62,000 dollars per coin, and this is going to be followed by an alt season, like a mini alt season, and all the other altcoins are going to pump, including this token, right? So if you manage to grab some of these tokens along the way by dollar cost averaging, you can probably grab some more when it kind of slumps down to 38 cents or 35 cents, in that range, and you can probably buy it at that point. I kind of bought it at around 60 cents. I kind of bought some around 60 cents when it went down a bit, but I'll kind of add some more into this token when this token reaches around 38 cents range. But that's just me, right? If you look at the Bitcoin comparative, you can clearly see that Bitcoin comparative has much more activity than the dollar comparative. That's mainly because of the Bitcoin price itself going down and up and down. So you can clearly see that there were multiple peaks when it comes to Bitcoin comparative, and its all-time high is obviously being at the same time as its dollar counterpart. But you can clearly see that it was like much more like an oscillator, where you could have some predictable ups and downs in Satoshi value to make some more Satoshis, right? When it comes to Bitcoin comparative too, the price at the current price point seems to be like at relative lows, and I believe that the Bitcoin comparative will also continue to drop because Bitcoin itself is going up. So that would mean that this token in Bitcoin comparative will go down. I believe that this token will probably go down at around and retest about 600, like 500 to 600 Satoshi range, and then it will start rallying back up, right? Again, that's something interesting to see. You can also see some really high spikes in volume candles since the mid of February, whereas before that there was no volume whatsoever, right? You can see that this token is also available on Binance, so it's easy to pick it up. You can also get it on other exchanges, but although I wouldn't really recommend other exchanges. If you have accounts on other exchanges, and if you feel like it's good to buy it at those exchanges, then go ahead and buy it by all means. Otherwise, Binance would be the most safest and the high liquidity option to buy, right? So again, don't take anything in this video as financial advice. I'm not a financial advisor. Please do your own research before you put any of your money on this token. What would be my final verdict? I would say that this token, along with this entire blockchain project itself, is definitely going to be um, performing well till Ethereum 2.0 comes into play. And when Ethereum 2.0 comes into play, there may be a big crash in multiple blockchain projects, because people will immediately start leaving other blockchains and moving back to Ethereum, because again, people like Ethereum, and there are also a lot of projects on Ethereum, and that can temporarily stall the growth of other blockchains. But as more and more people start coming in, more and more retail investors start coming in, they're going to have a multitude of blockchains which will offer interoperable DeFi yield, with some blockchains offering very high yields for the same token compared to other blockchains. So people would try to move from one blockchain to another blockchain where there is no fee for one blockchain or very little fee for another blockchain, but the yield is very high. They're going to probably move tokens from here to there and there to here. That will kind of sustain the other blockchains, despite ETH being the leader, right? In that kind of an environment, I believe that Phantom will definitely thrive, and Phantom will definitely continue to thrive as long as it's EVM compatible, and it seems like it is already EVM compatible. So there will be it will make it easier for developers to migrate projects from Ethereum or any other blockchain that uses EVM into the Phantom ecosystem, right? So if you believe in the long-term potential of this project, then this would probably be the right time to buy. You can also wait to buy it at 38 cents or 35 cents in that range, but it won't be staying here too long in these price points, because due to the new all-time highs of Bitcoin, you can expect all the other altcoins to kind of pump for the second time, and that means Phantom will also pump, which can potentially take its price up to $1 or more by the end of this bull run, right? Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.